Hey you guys, welcome to my channel. Shelly the Forex Trader here. In this video, we are going to be going over reading charts as far as recognizing a trend and how to go about staying relevant to current price and really setting up your trades according to what's happening in the now. So you guys, we're going to jump right into it. I'm not going to talk out of depth. We're going to just go ahead and get to what y'all are here for. So in this example, we're looking at GBP JPY. Now, I did bring this back just a touch to replay the scenario that took place after this uptrend. But first things first, I wanted to show you how to recognize an uptrend, and then I'm going to show you how to recognize the break in that trend, which will then put you in a downtrend. Because as you all know, the market moves up, down, sometimes sideways, but overall, there is a trend that you should follow for any given market. So in this example, you guys, GBJPY was in a very, very, very strong uptrend. Overall, that have been buying for a very, very long time. Whenever you are recognizing your uptrend, you guys, you want to look for those very low points. And then from that point on, you want to recognize that price is moving upwards. So right here is the very, very swing low of things. And then from this point, the market went and produced higher highs and higher lows. Now, what higher highs means is that price is moving higher and higher. And while it is moving higher, it is also creating those low points, which will then be your higher lows. The reason they call it a higher low is because it is higher than that first previous low point. So you have this low point, then you have your higher high, then you have your higher low, then you have another higher high, another higher low. Again, this low is higher than the previous low, which is why it's higher. And then from that point, you have higher highs, higher lows. And then at this point, price started to move in what we would call a sideways or consolidation period, meaning price didn't have a clear overall trend. So now moving on, you guys, at this point, and you might have just heard my dog bark. He just got let inside the house, so he comes in sometimes loud. So I'm sorry if you heard that barking, but if I stopped and made videos over every time he barked, I'll be recording all day. So if you heard a bark, it's okay. I have a cute dog. He's my fur baby, as a lot of you know. So anyhow, this is how you recognize price moving in an overall uptrend. Once it decided to break out of this consolidation period and then went back to creating those higher highs, higher lows, higher high, higher low. And then from that point, price just continued to move upwards. Now, moving into today's market, and actually, before I do that, you know what? No, I'm going to leave all these dots here for now. Moving into today's market, you will notice that price began to sell. And what that means is price pretty much got to its highest point, and then it couldn't break that point. So I'm going to replay this first, and then I'm going to explain something. So first, we had an overall uptrend, and then from that point, you guys, price got up to this point, and it pretty much was like, I'm not breaking this level. I'm not ready to. I'm then going to reject it, and I'm going to proceed in a downtrend. Now, looking at this deeper, you guys, this is the very highest point. This is what we will refer to as a swing high. And then from that point, and let me change this color. I think I have to click first before I can change it. So I'm going to change these to black. Oops. Okay, so this is the swing high, the highest high from that preceding uptrend, which is then going to trigger this downtrend. And from that point, price is now creating lower lows and lower highs. So instead at first we had higher highs and higher lows. Now we have the highest high. And from that point, we have a lower high, a lower low. I had to make sure I wasn't going to say that wrong because this is like Peter Piper Pan tongue twist type thing to me. So yeah, anyways, so we have our highest high and then our lower high, lower low still being produced because there hasn't been a pullback yet. And obviously that hasn't happened yet because this is today's market. So you will see though eventually that once your downtrend does take place, price will respect the overall downtrend and a pullback will take place, and then it will produce the lower high, lower low, lower high, lower low, all the way down, or however it moves, because you know sometimes price will move in a specific manner, like how in this case we had some sideways action. So that could happen again. It just ultimately depends on, you know, how price moves. And, you know, we don't predict the market. We react off of what we see. So right now, and I'm going to delete this chart so it's not so messy. So let's start all over. So now to tie all that in and how you actually go about, you know, predicting and reacting off the market, we don't predict, we react. And how we react is based on supply and demand. So that brings us to the next topic of this video, supply and demand, you guys. Supply and demand is where your buys and sales take place. This is how you base your entries according to what's happening in the now. So first thing that we did was reading trends, upwards, well, uptrend and downtrend. Second thing, supply and demand. Supply is your sales, demand is for your buys. So we did the trend. Now we're doing supply and demand, you guys. Now, supply and demand can be ideally done on any time frame. It doesn't matter the time frame you choose. The best thing you could do is just understand whatever your overall trend is and tie that into your supply and demand zones. So I don't want this to get in the way of anything. So I'm going to use my rectangle tool. I always use this to box in my zones. The reason why I don't rely on those little skinny lines that you see people use is because ideally they're not as reliable. And there are situations where you'll set your target price based on those skinny little lines. And sometimes your trade will not be a winner because ultimately the area that you're using is very small versus having a boxed in area where you can ideally set a target price based on that given area. So how do we make our supply zone? The first thing you do when you make your supply zone is, first of all, you want to be relevant to where price is currently at in the market, because ideally you're going to be taking trades based on that, based on what's happening in the market, in today's market, not the past, not, you know, the future, because obviously we can't even see the future. You want to base it on what's happening in the now. So price is right here where this pink line is at $156.70. Now, this sale is already ongoing, you guys. So I'm not going to put a zone right where that price is at, because ideally I want to set my supply zone where the sale took place, so that ideally when price does come back up to this area, which it will, because history repeats itself, I will already know that this is a possible area where strong sales can take place. So you want to put your supply zone ideally where you see a strong impulse move taking place, wherever you see a rejection candles taking place, wherever you see your morning star, evening star, your shooting star patterns, that's where you want to be setting your supply zone. Now, the next thing you should be thinking is, okay, I know the sale took place here. Where is it going to sell off to for me to look for a potential buy? So now you want to put your demand zone. So we understand that the sale is taking place right now. And I understand that right here is where we notice a lot of action takes place. Price struggled multiple times to break this specific level. And instead of breaking it in a downwards trend, it continued to buy. So I'm going to put my demand zone right here. And if you look at it, you notice that price touched here. It didn't break through though. It continued to bounce up. It bounced up there. It bounced up there. It bounced here, as well as here, 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 there. And this point, price was already taken off, so it didn't come back down. At that point, it just did its full impulse move. So what this means is, because we know that price rejected this area multiple times, it tested it multiple times, and it did not break below it, we know that when price gets here, there's a strong possibility that it will reverse at that level of price. Now, there are going to be points in the market where your zones are in fact broken, and you know, price can sell past this point if it decides to do so. What that means is, and I'm going to write this on here for you, your supply can become, if I can type, a demand zone. Your demand zone can become a supply zone. React based on what you see. No predictions. No matter what, no predictions, you guys. Oh, sorry, my alert's going off. I'm actually gonna check that, y'all, because I need to, I'm trying to catch a trade, so forgive me. I need to look at this though to see what's happening. Let me see. Let's see what's happening. And I will explain these indicators in a later video. Right now, though, I am just trying to make sure I'm not about to miss this trade, because I think I'm about to get in for a sale. I'm going to see what happens. I'm going to let that play out a little longer. All right, so let's go back to GBP, JPY, because I don't think it's ready to get in that trade yet. So let's go back to the day chart. And I am going to hide these. Drop a comment below if you want me to cover these indicators, y'all, because I'm mainly a price action trader. So that's why I have these hidden right now. But if you would like me to go over stochastic and MACD, leave a comment and I will make a video covering that. So Excuse me, I have a cold, y'all, so I know I sound probably terrible. I be trying not to clear my throat, but if I don't clear my throat, then I can't talk. So let me just get some water, that'll help. So, sorry. I know, I'm sorry, y'all. I didn't want to let anything stop me from making this video. So, anyways, let me see what happened to our notes, because I want y'all to have these. They're like right there. So like I was saying, your supply zone can become a demand zone, and your demand zone can become a supply zone. What that means is somewhere later down the line, even though we know that a strong sale took place here, somewhere in the future, price can break through, and this can then become a buyer zone, and price will buy up to the next potential supply zone. And then for your demand zone, what this means is price can sell, it can get to where you would look for your buys, but sometimes price can continue to sell on down to another potential demand zone, and this is now a supply zone. So there will be moments where your zones can turn into the opposite or one or the other, whatever. I'm pretty sure I understand what I'm saying. So right now, my best advice in these situations, you guys, I always tell my students that whenever price is in between these zones, personally, you do not need to be looking for any setups. If you do decide to look for setups, go down to the lower time frames and create supply and demand zones that fit that lower time frame that you decide to go to. Just like how I was on NZUSD, I was actually viewing that on the 15-minute chart, and I created my zones on the 15-minute chart. So if you want to catch, the remainder of this trade, I suggest you go down to a lower time frame and make zones that fit that time frame so that you can catch a quicker entry and just, the remainder of the setup without, setting inappropriate stop losses and, things of that nature, because you don't want to get in this trade and set a stop loss all the way up here because you're relying on these zones. You want to make zones that are relevant to current price on a lower time frame and set your stop losses and everything according to that. So I hope this video was super helpful, you guys. I hope you learned a lot. I do have more videos coming. I know this video is not super long, but I do believe you learned a lot from it. And if you need even more help, you guys, I have an amazing course that provides an insane amount of value, and it literally gives you an infinite amount of examples on how to do all of this. So I will see you in my next video. Don't forget to like, don't forget to leave some comments letting me know if you want more of these videos, if you want more information on stochastic or MACD, and if you just have any small questions, leave them in the comments, subscribe to my channel, and stay tuned for the next video. See you guys.